Hi folks, Shaun here at Reliant Wealth Planning. First and foremost, I wanted to tell you we look very forward to the time we can start meeting with you again face to face. As many of you all know, we spent about 6 weeks in the beginning of the year renovating our conference room to try to make things as comfortable as possible for you all. We got to use it about 5 times, and then the pandemic hit, and we had to stop in-person meetings. So we look forward to the time that you can enjoy that new conference room and the effort that we put in for that. Reliant has been working full-time. Everybody's been full-time through this entire episode, although for about 6 weeks, almost everybody's working remotely. Over the past couple of weeks, we've been bringing people physically back into the office. So, we're spread out now, some in the office, some at home. But as the situation allows us, we're bringing more and more people back here physically and getting ready for those in-person meetings. Very quickly today, the purpose of this video is I wanted to give you some updates on TAPA, the Tactical Allocation of Passive Assets strategy that many of you all have money in that we manage for you. As a quick review, back on March the 1st, we got the first signal that we should probably move assets out of the stock market. And in TAPA, we did that. We moved the majority of the money out of the stock market into the bond market. Through most of the rest of March, as some of you all remember, the market just continued to tank, and it hit its bottom around March 23rd or so. So it proved to be a pretty good move to move most of the money out of the market so it wasn't exposed to that drop. Then the market started to turn around. We started to put the first chunk or tranche of stock back in TAPA, back into the market on April the 14th. So that amount went in, so it's gotten advantage of the rise when it didn't have to hit all that drop that the market did. And then just very recently, we put a second tranche or chunk back into the market. So I wanted to let you know because you'll notice those trades occurring. You'll get confirmations. Just wanted to let you know what was going on is that we've now placed the majority of the money back into the market. We have one more chunk to go. Now, to let you know, most Wall Street analysts and asset management firms, they don't believe in this market rise. And what I mean by that is they think it's something called a bear market rally, which means it's going up, but that it's going to head back down. And if you all force me to say, well, what do you think, Shaun? What's your guess? I would tell you, I guess they're right. My guess is, I think we're going to see one more downturn before we have a sustained rally. What's important about that, though, is we are very humble when we're looking at the market right now. And humble meaning we don't profess to understand what this pathway is going to look like. This market is like nothing we've ever seen. There is no playbook for this. There is no past guides. So we're trying to remain very humble. And because of that, we are definitely not using our guesses, our hunches, or our emotions to manage the money. We're only sticking to our very disciplined process that tells us when to put money in and when to take money out. So based off of that, we've been following that, and it's been telling us put these chunks back in, and that's what we've done. And it's worked out for us so far. However, you should know that if the market were to turn and go back negative, we are just as ready to start taking the money back out. So we're ready to take the money back out we've put in, or we're ready to put the rest of it into the market and get it working again, whichever the discipline process tells us to do. So I just wanted to give you that quick update. You'll notice those trades happen. And as always, if you have any questions, we're here. Please let us know. Thanks.